Here, so welcome to my free weekly newsletter. I'm going to run through the major asset classes and with sort of give you some sense of where I expect the markets to move over the coming week, which will be the week commencing the 9th of December. We're heading in towards Christmas. Keep in mind that usually from around about mid-December until the first week of January, the markets tend to go into a little bit of a coma. It's a really good time to up your educational skills, read books you've been meaning to read, really just build up on that stuff in anticipation of kicking off in 2025. Good Lord, I can't believe I'm going to say that. And we're only just getting flying cars, so we're still a little bit behind what I expected things to be when I was a kid. Okay, so first of all, we have got out of Australia, interest rate decisions to be always interesting, especially when they start to occur, because they tend to kind of follow each other, especially if the US is leading. So I always want to see what happens there. Out of Euro, we've got that as well. So we've also got a potential here for the ECB rate decision, but there's no forecast amount at this time. US news is predominantly, I think, just going to continue to tick over CPI data, not expecting much here. And then we've got GDP coming out for the UK. So plenty of things there to create volatility in the markets, which can disrupt a really good trade. If you're already in one, always consider taking some potential partial profits or making sure your stop loss is in place and obviously not exposing yourself to unexpected moves in the market. Right, moving to the chart. So first of all, this is pro real time, by the way, if anyone is wondering which platform I use it because I used to use eSignal. There were a whole lot of other really good platforms going back, 10, 15 years ago. I really like this one. I found I could change the layouts, change the colors, use hotkeys and all various types of things, and the quality of the data is very good. So if anyone is curious as to why I use the platform, that is it. But obviously I also use TradingView and MT4, MT5 and various other platforms. So after a while, they all start to merge into one, but this is my go-to for my general market analysis. So here we go. We've got the VIX, which is really looking at market volatility. You can see it's heading towards lows at this time. Again, right now, the market is not stressed. That's really important. So we look at a combination of factors to kind of gauge the pulse of the market. And we're looking to see, and right now, volatility is at lows. It's not a sign of anything to come, other than just saying that the market is very calm at this point in time. Now, when we move across and have a look at the dollar index, we broke the lows previous week, so that means that daily uptrend was done. It meant that we shifted into a weekly retracement. We also had a weekly swing high. We're at this range. We've come back in, and this week or last week, I spoke about the idea of us coming back down towards the moving averages, and in some ways, I still think that is a fair possibility. We really haven't had a deep enough retracement, and if I just take the Fibonacci levels and just measure that from the lows to the highs, I would expect a deeper pullback. Yes, ultimately, if that dollar is going to break out and it's going to be very strong, the shallower pullback is something that we could, in hindsight, look back and get that. But ordinarily, I'd expect actually a pullback to the 50 to the 618 to be something that is still on the table. So that's going to be interesting to me this week. Do we break the low? Do we break the high first? That's something to watch because I do think there is still the potential for a deeper pullback. But as I said, if that dollar is ultimately going to break out and get stronger, if we're on the verge of something different, because we're seeing a lot of the markets already stretching themselves. So if we're on the verge of something different, then that is something that could certainly be the case. So we had non-farm payroll on Friday, and the numbers don't really matter too much to me at this time. It's really, there was nothing worthwhile, no alarms or red flags or anything. And again, if we had a single day that was off, that in itself does not constitute a trend. So again, nothing. I don't think anything worth mentioning. I would mention that we did finish with a relatively strong candle on the dollar index. The dollar itself looks very much as though it would like to continue to head out. So it's really that weekly, based off experience, do we get that pullback? But technically, there are signs here that the dollar wants to try to head higher again. Let's move across and have a look at euro dollar. So euro dollar, I was speaking about this bearish candle last week. Let's get rid of that, saying that we had a pullback, we had a lower high, and potentially we could see the market head low. We found support. Price actually came up and broke the high. However, we are still technically in a pullback again from that weekly. I really would still expect this to potentially pull back further, but I would say this is that the euro dollar is not really very strong at the moment. But yeah, I would see this as that potential to pull back to that 108. And excuse me, so far the monthly candle is just an indecision candle. We had a weekly indecision candle, and again, indecision candles can often lead to a move to the downside. In fact, what I'd like you to see here is the wicks that we have on top all closing around about that 105.75 area, and so a break below this could signal a continuation to the downside, and the euro itself not being super strong would potentially lead the way. So let's have a look at cable. So cable looking a little bit more interested in kind of testing the highs a little bit stronger, that trend a little bit more bullish, which makes sense because we can see that monthly trend to the upside still producing a series of high lows, and therefore this uptrend may still be intact. Move across, have a look at dollar yen. So dollar yen, as I said, we actually produced that bearish candle here on the monthly. We broke the low of that. And again, for me now, I think technically I like the look of this to potentially head lower. So I spoke about a trade idea during the week of price pulling back into the moving averages and a break below this. We've just tapped below that low. I was actually ideally wanting a pullback into this level of resistance and then a continuation to the downside, which could still happen. But we have now broken that low. So the question now is, will we continue down to those key levels? And actually some of the other yen pairs are looking good. I'll find a moment to quickly step away and have a look at those after I look at the dollar at this time. So dollar Swissy as well, we've got that move down. It's really interesting. Friday morning, we were closing right near the lows, and then by the end, after NFP, we get that move up. Now, it's not unusual on Mondays for Monday positions to change based off NFP. So NFP in its own way can be an indicator of what the next week is likely to hold, but also can just be just a freak day. Okay, there's just a lot of money changing hands, a lot of activity in the markets, and a lot of speculation, a lot of volume of trading, but it isn't necessarily conclusive as to what happens after that. You can see here dollar Swissy so far with the small bearish indecision candle on the monthly so far forming. After that first week, we could still see a break low. We'll see. Dollar CAD. So dollar CAD was interesting. Of all of the majors so far, this had the most conclusive kind of a break to the upside there. We've spoken about this before, this break of the range. It's definitely now out of that range. It usually is between 1 and 3 candles, but you can see it's continuing to push higher, and this was a solid break and a close above that level at 1441, which was offering some resistance. Even though we have that bearish divergence, in order for this to change, I'd have to see an immediate reversal on Monday to bring it back below here. This would have to be a failed breakout. And if that did happen and we broke either of these lows, then I would see a bigger move to the downside. So again, as annoying or frustrating as it is to keep saying that that dollar is kind of deciding what it wants to do, it really is. It's in a zone and it's in that area. It's trying to decide which way it's going to go. Let's have a look at gold. So gold is still stuck within this area. If you look at the weekly, we've basically spent the last 4 weeks in the same area. I've spoken about how I think that it's overextended and there is that potential for this to do a bit of a correction to the downside. But in order for that to be the case, we really need to start breaking those lows. Okay, so it's forming a wedge and therefore break to the upside. If it breaks through these or above these highs here, we're going to see it continue up. Alternatively, if we break down through this downwards upward sloping trend line and through this level of support, I expect it to head lower, which is annoying, but that's kind of where we are. So it's not really a surprise if the dollar doesn't really know what it wants to do. Gold isn't really sure what it's going to do. It would seem that potentially between now and January 20th, possibly with the new president being sworn in or the new administration taking over in the US, possibly that's what the markets are doing. Also, we've got Christmas coming up and the markets can often just go into a bit of a coma. Moving on to crude oil. Crude oil continues to head lower under that selling pressure. So I've spoken in recent weeks about how my expectation is for crude oil to currently, based off all of its behavior, to break out, and that $40 is potentially on the horizon there. And for now, it's continuing to produce that kind of pressure. I'm really looking for a solid breakout bar to close right down below here. That will be, for me, potentially a signal that it's now on its way. Let's have a look at the global indices. So global indices, I spoke last week about how overall the trend is very healthy. I do think we are possibly starting to go parabolic, and we're in the early stages of a bubble. And by the way, I was going to say I've created on Substack. I've got the Market Mentor, which is a newsletter which I'm very proud of, and there's different degrees of information that I put into it. There's free content as well as paid content for traders, and then there's paid content for traders and investors, which goes into a lot more details. So there's kind of 3 stages of information that you might be looking at. And the reason I bring that up is I've kind of put in during the day any trade setups that I see. I'll potentially comment on those. And actually, I want to talk a lot about the fact that we live in the golden age in fraud, and how does that tie into the markets? What are we seeing and what do we need to be worried about? And I hate fear mongering. I really hate fear mongering. But I do think you have to keep one eye on the horizon as to kind of what are the possibilities out there, and also how we manage that time. Also, it's not really a case of chicken little, the sky is falling. We can see when the markets will start to do a correction. So we will start to see that data in the markets. There will be time to be able to adjust it. But at the same time, there are certain things that I'm concerned about, and they could be years away. So, but I do want to talk a little bit about them and create a checklist for them. So one of the things I've created in the newsletter is going to be the ultimate bubble checklist, global bubble checklist, which is just very long and very detailed, but anyway, very interesting as well. S&P. Okay, so we continue to push higher. We're seeing you could argue that there's some signs of exhaustion, but I have to tell you, ladies and gentlemen, so far the MACD is very, very happy with this. So overall, any pullbacks here for me at that, for now, I am still looking for buy entries into this for trading, short-term trading opportunities, 3-to-1. Not necessarily at this time looking for investment buys, so to speak. I'm a little bit more cautious on that, but for short-term trading opportunities, I think there's still some good potential here. We're still, we're starting to go a little bit flat, but again, these are not major red flags at this time. In every other respect, the pulse of the market looks okay to me. I'm not too concerned about that at this time. I'd have to see some really very strong bearish price action that kicks in on the weekly or daily to start to adjust the view as to what's going to happen. Here you could see the Russell 2000 bumping its head up against previous highs, which, this is going back to 2021. This is a strong level of resistance, and so we could have a bit of a pullback. And then the real question is, will we ultimately break through that? At this time, I think that the odds are good that we will still ultimately break through that, but we'll see how it goes. Now, I also spoke about how Bitcoin was forming this wedge and that it had a couple of different options, breakout to the upside or breakout to the downside. And on the day that it did, it actually broke and then broke both sides and just volatile, which is frustrating, I think, for a lot of traders who were potentially triggered in and stopped out either way. But ultimately, it still continues to test this 100,000 level. Still wants to go up, but now what I'm starting to see are some signs of a bit of stall here. And yes, you know what? If we did ultimately have a bit of a pullback towards that, I still think 80,000, 85,000 is a decent retracement for it, or a decent level for it to pull back into. That would be very, very healthy. And it really wouldn't impact that monthly setup too much. It would take, 1 or 2 weeks down and another week up, for example, and we would see a continuation on the monthly. But at this time, you can see it's battling with that level, and definitely that is presenting some problems. So what would I need to see? I still need to see a break of these levels. I'm going to keep this level in here, a break below that, and a close below that, to me, would signal the beginning of a correction to the downside. Let's have a look at Ethereum. Ethereum, much healthier, really much healthier. MACD continues to produce new highs. Price is producing new highs. Price is not that overextended here. It is coming into old highs over here, so around that 4,000 level. But overall, this is not looking necessarily as bad, and it's got a lot of room, all right, to head up to these highs over here. So that's kind of partially why I think that there is potential there for Bitcoin to keep going a little bit higher, or at least treading water while Ethereum does. So there's a little bit of a lag there, but there's still that room to the upside. Very quickly, I'm going to take you through the Magnificent 7. I think I should add them in here. We just do a scan of the Mag 7, which are the biggest kind of tech companies out there, and obviously the biggest companies in the world in terms of market cap. So let's just have a look at these. Overall, very happy with Apple, not too concerned about this, still creating new highs. Obviously, overextended here, does need to do a pullback. So yes, I would be expecting a little bit of a buy opportunity when price pulls back into this area. No concerns at this time. Microsoft as well, just starting to enter these old highs over here. So let's bring in a key monthly level. Let's just put that in at 453. I think 450 is really the kind of key level. Weekly looks really good. No concerns over there at this time. Let's have a look at Amazon. Amazon obviously on fire, continuing to take off. This is where we ultimately had a bit of a pullback previously. That worked pretty well. It's definitely going parabolic. You can even see just in the last, say, 60, 70 candles here, just straight up parabolic. So yeah, at some point I do expect a little bit of a correction here, but that could still be a couple of weeks away. So I'll keep an eye on that. Alphabet. Google still continuing to push higher, so there's still some upwards momentum over there. Not really worried about anything just yet. Not seeing any massive red flags, so that looks good. Meta pushing higher here. A little bit of a lower high here, so yes, there's showing some signs of that sort of exhaustion coming in, but the daily looks good. So again, I really would need, then I'm looking to the weekly to see some kind of a sign. And again, we're not, I doubt we'll see anything. It's unlikely we'll see anything before January. So we might as well just kind of observe and just see how things go. I think what I'm going to do, I'm going to break my usual rule. I used to just kind of take a break completely for 10 days. I think I'll keep an eye on the markets and probably update the free news stuff, because I know that quite a few of you are going to be skilling up in terms of your education between now and the new year, and so I'll probably be providing you with some content there. Okay, so NVIDIA here producing, definitely showing some signs of exhaustion, stepping into the candles over here, starting to slow down a bit. And yeah, we've had a bit of a pullback, but we are showing some signs of exhaustion here, which again could mean a pullback down towards 100 or back in towards this level of resistance, which you could test as support. So we'll see how that goes. Some strong support currently at that 132 level. We'll see if that holds. And then finally, let's have a look at Tesla. Tesla kind of just continuing to push up right up towards 400, towards its highs. I think it does really want to tap that and see what's going to happen. So far, a little bit of a lag on the MACD, which could show a little bit of exhaustion or the trend kind of eventually running out of steam, but no confirmation of that yet. Okay, so at this time, the trend is very healthy on the weekly. Looks fine on the monthly. A little bit overextended from the moving averages, of course, and from the weekly here, but not seeing signs of that. And if we did, all that to me would initially mean is just a weekly retracement. So even if we did see some signs of weakness here, that would mean a weekly retracement and a continuation. I would still hold this as bullish. As I said, if we are I do think we're in the early stages of a bubble, but again, that bubble could last for several years. And I'm not trying to fearmonger. I'm just trying to say that yes, I'm cautious as we go, and therefore I can explain to you what I'm looking for to see with the bigger stuff. So the bigger flags would be things that start to show up in the monthly, but we're not seeing that at all at this time. Okay, I'm going to leave you with that. Oh, what I did want to do quickly is run through some of the other charts. It's a slightly longer video this week, but I think it's worth it. Okay, so first of all, very quickly on the yen crosses. We've all produced, I've been talking about this. We've got some bearish candles setting up here at levels of resistance. So there could be a continuation to the downside if we break the lows here. However, I'm always just a little bit cautious when I see those setups occurring across the board. Here, for example, is one on GBP. I quite like the look of this targeting through to the one to the downside. The one that actually triggered already, which happened so quickly on Friday, was CAD yen. That looks really good. And that one actually happened during the day on Friday. So that looks particularly good. I quite like the look of that. Some traders may actually enter this already as it is, just high above there and targeting 3 to 1 again, or looking for an entry on a lower time frame. But that would appear to be some. So the yen crosses to me definitely is showing some interest. And finally, I think pound Aussie, for example, Euro Aussie might be something worth looking at. Euro Aussie is still within a range. I'd stay away from it, but pound Aussie showing some interest there because a lot of the Aussie pairs are obviously quite keen on moving, and Aussie and Kiwi tend to move in tandem. That's it. Actually, I'm going to leave you with that for now. I want to wish you a wonderful week, and I look forward to seeing you. Subscribe to my newsletter.